Has you ever thought about how some of those really fast-moving commercial real estate deals actually get the money they
Yeah.
need
You know?
to actually happen?
Yeah, that's a good question.
Like how does the financing come together so quickly?
Right.
And you might be in a situation right now where speed is like the most critical
Uh-huh.
thing, or maybe you're just kind of curious about the financial strategies at play behind the scenes.
Yeah, absolutely.
So today we're going to unpack the world of what's called specialized lending.
Okay.
And this is the kind of lending that operates at a completely different pace
Right.
than your typical bank.
Totally different perspective.
Yeah.
And what I find really fascinating about this is how certain lenders
Yeah.
have like carved out a niche for themselves
Yeah.
by focusing on this rapid decision making
Right.
and a really deep understanding of a project.
Yeah.
So we're not talking about standard loan applications and months of processing.
Nope.
This is about agility.
Agility.
Yeah.
So we're talking about specialized balance sheet lenders.
Okay.
And these are the lenders who are primarily using their own capital,
Right.
which allows them to be way more flexible
Okay.
and make decisions much faster.
Makes sense.
So think of them as your go-to resource when you need to like jump on an acquisition.
Right.
That's really time sensitive.
Yeah.
Maybe you need to rescue a construction project that's stalled and needs funds like immediately.
Right.
Or you got to bridge a short-term funding gap just to keep a project moving forward.
To keep things going.
Exactly.
Yeah.
Or maybe you're dealing with an urgent refinancing.
Yeah.
Or you found this incredible value add opportunity, but traditional metrics just don't capture the full potential.
Yeah, you see so much more.
Exactly. And in these scenarios,
Yeah.
waiting just isn't an option.
Absolutely not.
You got to move fast.
Time is money.
That's a huge difference compared to how traditional lending works.
It is because, traditional lending is usually based on algorithms,
Right.
credit
Yeah.
scores,
Yeah.
and a really lengthy due diligence process.
Uh-huh.
And while that's super important in a lot of situations,
Of course. Yeah.
it can definitely slow things down when you need to move quickly.
Right.
And you need someone who really grasps the potential of your project.
Right. Like they get it.
Yeah.
They see the vision.
Exactly. So specialized lenders,
Yeah.
they often look at the project's viability
Right.
and the borrower's expertise as like the top priorities.
Interesting.
Yeah.
So let's give like a real world example.
Okay.
Imagine this prime multifamily property
Okay, yeah.
hits the market.
I'm listening.
It's a discount, but there's a 48-hour decision window.
Wow.
You're not going to get traditional financing in that time frame.
No way.
That's just not going to happen.
Yeah, you need to move.
That's when these specialized lenders step in
Yeah.
for acquisitions that need capital super fast.
Right.
They give you that competitive edge.
Absolutely.
And we also see this with mid-construction lending.
Uh,
Let's say a project stalls out.
oh, no.
These specialized lenders can inject cash quickly.
You need that lifeline.
And that infusion of funds can seriously make the difference between success and like some major losses.
Yeah, that makes a lot of sense.
And then there's bridge and gap financing.
Right.
Have you ever been in a situation where a project's almost done,
Yeah.
but you're a little short on that final bit of funding?
Happens all the time.
A rapid bridge loan can give you that essential capital
Yeah.
to get you across the finish line.
Yeah, to bridge that gap.
Exactly.
Exactly.
It's the same idea with time-sensitive refinancing.
Yep.
Or those value-add projects where you just know the potential is there,
Right.
but the numbers don't tell the whole story yet.
Right. It's not reflected in the initial numbers.
Yeah.
So you need a lender who gets it.
Right, who sees the bigger picture.
Yeah.
So how do these specialized lenders operate so differently?
Well, they often have more flexibility
Okay.
because they're not bound by the same regulations as traditional banks. Yeah, and they focus on like a more holistic evaluation of the project,
Okay.
and they use what they call common sense underwriting.
What does that even mean?
So it basically means they look at the bigger picture
Okay.
and they consider things beyond just the immediate financials,
So give me an example.
like the developer's track record
Oh, interesting.
and the long-term market opportunity.
So they're looking at the person
Yeah.
and the potential
Mhm.
rather than just the numbers.
Precisely.
Okay, I like that.
Yeah.
Do you have a specific example of a project?
Yeah, so there's this really interesting case study
Okay.
of a land development project.
Okay.
And they needed capital right away in the pre-construction phase,
Right.
which is something traditional financing usually struggles with.
Yeah, that's early.
Yeah, they're not used to lending at that stage.
Okay.
So this specialized lender came in and gave them a short-term bridge loan.
And what did that allow the developer to do?
Well, it let them start that critical site development work right away, kept the whole project on schedule,
Right.
covered all those early costs like engineering and pre-development stuff.
Yeah, the things people don't always think about.
Exactly.
Yeah.
Kept the project's momentum going
Right.
so they could secure that long-term construction financing.
Yeah.
And it really importantly preserved their equity
Right.
so they could invest in other opportunities.
So it's like a snowball effect.
Kind of.
Yeah.
Yeah, it keeps things moving.
I see.
Yeah.
So they're really stepping in to fill those funding gaps
Exactly.
where traditional lenders just aren't equipped to handle it.
Because of the timing or the rigid rules.
Right. Or maybe just not understanding those early stages of development.
Yeah, sometimes it's a lack of understanding.
Interesting.
Yeah.
Now, according to our sources,
Okay.
these loans usually range from like $750,000 to $10 million.
That's a pretty good range.
Yeah. And they cover pretty much most commercial property types,
Oh, wow.
except for office spaces.
Interesting.
Seems like offices are a little out of favor these days. Maybe.
So the big takeaway here is
Yeah.
that when speed and flexibility are crucial in commercial real estate,
Uh-huh.
these specialized lenders,
Yeah.
they offer a really valuable
Have
alternative.
lifeline
Yeah.
in some cases.
And it's all because they understand the nuances of these really complex deals.
They see the vision
Yeah, they see the
and
vision.
the potential.
So as you're thinking about your own projects,
Uh-huh.
or you're just watching how the financial world works,
Yeah.
think about this.
Okay.
How could understanding these alternative financing options, with their focus on being agile and seeing the potential,
Right.
how could that unlock new opportunities for you? Or maybe help you solve a problem you're facing?
Yeah.
And this goes way beyond just commercial real estate.
Right.
What if the key to moving forward quickly
Uh-huh.
is looking beyond how things have always been done?
Interesting thought.
Yeah,
Something to think about.
definitely something to think about.